All right, so is the Washington, D.C. area real estate market going to crash? I have many thoughts about this. It's probably the number one question I am getting asked all the time. And a new report just came out from Bright MLS that I want to dive into with you guys here and go through. But before I get started, definitely subscribe to my channel where I talk about all things DC area real estate and Northern Virginia real estate related. If you have any real estate needs, definitely shoot me a text at the number below and subscribe to my channel. So let's get into it. First of all, I have a few thoughts about this. The market has definitely slowed down, which makes sense, right? The interest rates were 3% for 2 years during COVID, especially, and now they're hovering around 7%, which has brought some sticker shock, and especially to the luxury high-end market, as housing affordability has definitely become an issue. Another thought on this is somewhere about 85% of homeowners have a 3.5 or less than 4% interest rate. So obviously a lot of people aren't inclined at the moment to sell, which is causing less move-up buyers. But let's get into the data for our specific area here in the DC region, and let's see what Bright had to say. And just to give you more of a heads up, Bright is actually our MLS system that a lot of people here along the Mid-Atlantic use, realtors use. So they have a ton of good data, and here's what they found about the DC region, which would be Northern Virginia, DC, and parts of Maryland. So as you can see, let's take a look here. As you can see, closed sales are down 27%, but the median sales price is actually still up 3% to $532,000. So we haven't had that big of a swing or decline in prices yet. But not surprisingly, median days on the market has gone up to 15, and then new pending sales are down 32%. New listings, though, are down 22%. So like I just said in the intro to the video, not a lot of people are listing their houses for sale right now, and then active listings is down 4%. And then month supply, which is actually up 10%, is 1.4. So what that means is, if no new listings came on the market, it would take 1.4 months to sell. So technically, we are still in a seller's market, but I feel like honestly right now we are in a buyer's market. A lot of sellers who waited a little too long to sell at this point, you know, they are starting to reduce, or they're offering credits to do a rate buy down, which if you text me at the number below, I can tell you more about that program where you can actually get a 4% rate for a year. This was another telltale sign for me right here, right? So one of the cool things that they have is showing. So there was 104,000 showings on houses in the DC region in September, which is down 30%. So, you know, right there, and they also kind of talk about the T3 home demand index, which shows that even though it says, see, your mortgage rates rises and prices remain high. So what they're saying is housing feels like it's doing a pullback of activity. Regionally, both closed sales and new pending sales were at their lowest levels in September in 8 years. Homes are remaining on the market longer. In September, the median days on the market in the Washington, D.C. area was 15 days, which is the highest level since the start of the pandemic, basically. So now we're basically where we were at the start of the pandemic with more of a normal market, which is kind of a good thing. Inventory did grow by 12% between August and September, so we are seeing more houses come on the market, but not like a huge influx that you would have seen in 2008 and all that. Now you can see closed sales as we were back in the 2017, it shows here, and we go all the way up into the 20s, and right there you can see where May and April and June of 2020 is where it dipped, and that's when the COVID lockdown started. And then as we got into early July there, that's when the government really started to lower those interest rates down to the 3 to 4 range, sometimes 2.5. And then the sales skyrocketed here in April, May, and June of 2020. As you can tell though, they slowly started to go down. And what you see here in May and June is that's when the Fed started to really cut the rates to slow down inflation. So as you can imagine, the market did start to slow down somewhat, right? So the rates have obviously had a huge effect, but you can see medium sales price. So we did have a high peak here of, we were up almost 15% at one point in August of 20 of the 2020 of the sales prices going up, the median price. Now it's starting to level off to more of a 3% range. And then medium days on the market, you can tell way before the pandemic, we were hitting about 35 days on the market. And then as the pandemic went, we were seeing 3 to 5 days. Now we're kind of creeping back up to about 15 days. So look at this, in a normal market, we were about 30 to 35 days medium on average of being on the market. And right now we're sitting at 15 days. Now I do expect that to rise as I'm starting to look at some more, when I do some more showings, I'm seeing some houses sit on the market a little bit longer. New pending sales, you can tell obviously that went down about 30%, but at one point back in April 21, it was up 60%. So we had a really huge rise here. Active listings over the year over year. Obviously this year we're starting to see a nice influx, but look how much has gone down. Still, even with these high rates and less buyer demand, active listings are still going down. And then that kind of just shows you can see as the showings really leveled off at the start of the pandemic and then went all the way up to a max of up 200% in April 2021. And since then, it started to level off. Now, one other thing that's really interesting here, let's break down some local areas, kind of see how their markets have been faring here. So Alexandria is down 35%. Key here with Alexandria though, it's always skewed because of a huge condo market. Condos, definitely when the market shifts, start to take longer to sell. Arlington's down 14% in closed sales, Fairfax 35%. Fairfax County 30%, Falls Church 45%, Frederick County, Maryland's down 23%. Loudoun County down 35%, Montgomery County down 26%, Prince George's down 27%, and then Washington, D.C. down 18%. And then you got your medium sales prices. So again, Alexandria will kind of being an outlier with their average sales prices are down medium sales price down 9%, Arlington's down 13%, but then Fairfax is still up 14%, Fairfax County up 5%, Falls Church is up 20%. Loudoun up 6%, and then you get into DC's kind of leveled off about 1%. So you are kind of seeing like more, you can tell the change is there, and we're seeing more of a normal medium sales price going up. Now, do I expect some, days on market and things to creep up and some prices to come down? I do. I think some of the sellers that got away back in June when they sold, they got top dollar as those rates were around 3%. And some of the buyers, 3 to 4%, because the buyers had locked in at the beginning of the year. But I also think there's just the problem here right now, folks, is what I'm really seeing is the main issue is the rent is still expensive, and rent is really still increasing in the DC area. The places that I think are really going to get hit is where the crime has been really high. Look to the midterm elections here. You can tell, but outside of the economy, crime has been one of the major complaints of voters, and you're seeing areas like Seattle, San Francisco, New York City losing a lot of people to crime, a lot of businesses closing, and I really hope DC does not go down that route. They've done a pretty good job of it so far, but they've got to keep like crime down. That really pushes people out of the area and makes them want to move to areas like Florida or here in Northern Virginia in some parts. So let's see what they say. Our price is going to fall. Despite higher mortgage rates and slower buyer demand, the median home price in the Washington region continues to rise, albeit at a slower pace. As market conditions continue to be cooler than last year, it is likely that prices will fall from their peak in many local markets. So yes, of course, so many local markets are going to come down, right? Like when they're having less people come out or the housing prices became way too much, they will start to fall. Even if prices do fall, however, they will remain much higher before they were before the pandemic. For example, if the metro area's median price declined by 10%, it would still be up 11% higher than it was 3 years ago. So they do not expect prices to go down any further. So my guess is my guess is honestly, like right now, if you're thinking about buying, I definitely think it's a good time. Use an agent like me, of course. It's definitely a good time to buy in the sense that you can get a good deal. You got some desperate sellers there that maybe they're getting transferred, or maybe they're just, they waited too long to sell. And there are some programs, like I said, where you can get a better rate. So it is still a good time to buy. But if you're only looking to live in the place for 2 to 3 years, then definitely do not buy. Buying real estate is a long-term gain. You know, 5 to 7 years is what I tell people the minimum you want to stay in a place. The other thing is too, right? Like if you say, hey, you know what? I had someone call me that had been renting the last 10 years and they were thinking about buying now, but they couldn't get qualified. The thing is, look at all that equity they lost over the last 10 years. If they would have bought, and they were telling me back then the rate was 7%, 7 to 8%, which I've seen it typically be. So the rate, you know, if they would have held off from buying, or if they would have bought and took that 7% rate, they could have refi when it was at 4, and they lost a ton of equity, which we know most wealth in America is built through real estate. So if you are like holding out and you think there's a major crash coming, I was in the business when the last crash came in 08, and we had a totally different scenario where banks were stuck with properties they had to unload, investors were stuck with properties they had to unload, tons of foreclosures due to like shady lending practices. We just did not have that this time. The DC market though continues to be strong, but I do not see a huge rise in sales prices at all. I think it'll be an average. It may be flat for a year or two, but I definitely think we'll be back to an average of 3 to 4%, which is healthy. But the biggest, craziest thing is rent is continually going up. So if you are gonna rent or buy, I would definitely consider buying. And one of the things I've told some people too is if you are locked into a house with a great rate and you need to move, maybe not sell it, keep it as a rental property or an investment property. You might not ever see that 3% interest rate again. Obviously when they did that, it caused a ton of inflation. So I don't know how, unless bearing like another huge disaster, I don't see the government doing that. But that is my update on the DC area market. Let me know in the comments below what you guys think of your marketplace. What are you seeing? I will say in my neighborhood, I've seen a few more signs, but then a house just went under contract in 3 days, but 2 others are kind of sitting on the market. But when I've seen, definitely things have slowed down a lot, but I don't think we're in for a crash. Let me know your thoughts in the comment below and definitely subscribe.